Imagine a world where a single AI-powered cyberattack could unravel the intricate web of trade between the world's two economic superpowers, threatening to disrupt the global market landscape dramatically. Recent research highlights a startling scenario. AI-driven cyberattacks could precipitate substantial declines in exports between the US and China. Yet the American economy might weather these storms relatively unscathed, thanks to its more diversified trading partnerships. What does this mean for global economic stability, and how might it shift the balance of economic power worldwide? Stick around as we explore the far-reaching implications of these advanced technological threats and their potential to reshape our economic future. Recent research indicates that cyberattacks enhanced by artificial intelligence could significantly impact global trade, particularly affecting the exchange of goods between China and the United States. A study suggests that in a simulated scenario with extensive cybersecurity breaches, China's exports might decline by 8.2%, while the United States could experience a 5.6% drop. This difference is primarily due to China's substantial dependence on the American market, which receives about 20% of its exports. In contrast, the United States enjoys a more varied set of export markets, which could help soften the impact of such attacks. The economic relationship between China and the United States has deep roots in the history of international trade, expanding significantly in recent decades. After China entered the World Trade Organization, WTO, in 2001, trade between these two economic powerhouses grew rapidly. By 2020, the total trade in goods between China and the U.S. approached nearly $560 billion, according to the U.S. Census Bureau. This trade includes a vast array of products, predominantly electronics, machinery, and textiles, showcasing the depth of their trade ties. Moreover, the United States is one of the largest foreign investors in China, with direct investment stocks worth $116 billion in 2019. This financial interconnection emphasizes the mutual dependency that has developed over time, highlighting the potential vulnerability to disruptions like cyberattacks. The research, carried out by experts at Oxford Brookes Business School in the UK and the School of Information Technology and Computer Science at Nile University in Egypt, was published in the journal Risk Analysis. The study examines how AI-driven cyberattacks, which employ algorithms to identify system vulnerabilities more rapidly and broadly than traditional methods, could disrupt global trade. These attacks are particularly dangerous because AI-driven malware can alter its code to avoid detection, making standard cybersecurity measures less effective. The integration of artificial intelligence in cybersecurity represents a paradigm shift in how security threats are managed and mitigated. AI systems in cybersecurity use complex algorithms to analyze patterns and predict potential breaches, functioning continuously to identify anomalies that might indicate a cyberattack. This proactive approach is critical, especially as cyber threats become more sophisticated. For instance, AI can help in deciphering the behavior of network traffic and can automatically adjust security measures when unusual patterns are detected. This dynamic response is crucial in preventing data breaches and ensuring the integrity of sensitive information. However, deploying AI in cybersecurity is not without challenges. One of the primary concerns is the ethical implications of automated decision-making, particularly when these systems might inadvertently block legitimate activities or violate privacy norms. Moreover, the sophistication of AI systems also means that they require significant resources for development and maintenance, which can be a substantial financial burden, especially for smaller economies and businesses. These challenges underscore the need for robust regulatory frameworks that can guide the ethical use of AI in cybersecurity while promoting innovation. The economic implications of AI-driven cybersecurity are profound. As cyber threats evolve, the potential for economic disruption increases, especially for nations heavily reliant on digital infrastructure. Industries such as finance, healthcare, and retail, which depend significantly on digital transactions, are particularly vulnerable. A major cyberattack could disrupt trading platforms, compromise personal data, and even halt critical healthcare services, leading to substantial economic losses. For instance, a prolonged disruption in the healthcare industry could delay diagnosis and treatments, affecting patient care and incurring high costs for recovery and legal liabilities. Moreover, the economic impact of cyberattacks is not limited to direct losses. Indirect costs, including the erosion of consumer trust and brand damage, can have long-lasting effects on businesses. This scenario necessitates significant investment in cybersecurity, not just as a defensive measure, but as an essential component of business strategy. Consequently, governments and corporations are increasingly recognizing the importance of cybersecurity investments, which are expected to grow exponentially in the coming years. According to industry forecasts, worldwide spending on cybersecurity is projected to reach over $170 billion by 2022, indicating the scale of resources being allocated to combat this issue. According to Rehab Osman from Oxford Brookes and Sheriff Elgindy, a cybersecurity engineer, these sophisticated cyberattacks can adapt and evolve autonomously, learning from real-time feedback and changes in their environment, making them particularly challenging to defend against. Such threats could cripple financial transaction systems, introduce errors into stock predictions, and delay shipments, ultimately undermining trust in digital transactions and affecting consumer confidence. The evolution of cyberattacks over the past decades highlights the increasing complexity and economic impact of these threats. The first known computer virus, dubbed Creeper, emerged in the early 1970s, setting the stage for the future of digital disruptions. Fast forward to today, and the landscape of cyber threats has transformed with the advent of AI, where malicious software can learn and adapt autonomously. According to a forecast by Cybersecurity Ventures, cybercrime's global cost is expected to soar to $10.5 trillion annually by 2025, marking it as one of the most lucrative illegal activities, outstripping the global trade values of major drugs. This alarming rise underscores the pressing need for advanced cybersecurity measures and international cooperation to mitigate these risks effectively. In a scenario where these cyber threats were intensely realized, projections showed Chinese exports to the U.S. could drop by nearly a quarter, while exports to South Korea, Japan, and the rest of Asia might see increases of 4.5%, 5.2%, and 6.4% respectively. This indicates that some Chinese goods might reach the U.S. through these intermediary nations. A similar pattern was observed for U.S. exports to China, which could decrease by more than 20%, while increases could occur in exports to India, Japan, and both North and Latin America, suggesting a complex redirection of trade flows. The projections also highlighted potential economic downturns, with China's real GDP expected to decrease by 2.2%, the U.S. by 1.4%, and the European Union by 1.35%. This underscores the crucial role digital technologies and interconnected supply chains play in these economies and how disruptions can ripple through to other regions globally. Understanding real GDP, or GDP adjusted for inflation, is crucial in economic analysis, as it provides a more accurate depiction of economic growth over time by removing the distortive effect of inflation. This metric is particularly important for countries like China, whose rapid economic expansion has been significantly driven by its exports. Since the early 2000s, China has leveraged its vast manufacturing capabilities to become the world's largest exporter of goods, deeply integrated into global supply chains. In 2021, China's significant role in producing everything from consumer electronics to pharmaceuticals underscores its critical position in global trade. This interdependence makes disruptions, such as cyberattacks, not only a national concern, but a global one, with ripple effects potentially affecting economies worldwide. To address these evolving threats, the researchers recommend that governments and businesses invest in AI-enhanced cybersecurity defenses that can detect and react to threats immediately. They emphasize the importance of advanced technology investments, international collaboration, and heightened cybersecurity awareness to bolster economic resilience and mitigate the risks associated with AI-driven cyber threats. What do you think are the best strategies for nations to protect their economies from AI-driven cyberattacks? Share your thoughts and suggestions in the comments below. We'd love to hear your insights on this pressing global issue. Don't forget to join the Revel Discovery community by hitting that subscribe button to stay informed about the latest in cybersecurity and its impact on global trade. Dive deep with us into the world of technological threats and their economic implications for a more secure future.